Welcome to This Explainer. Today, we're unpacking Accenture's Q3 2026 earnings report. But look, we aren't just going to sit here and read numbers off a spreadsheet. What we're actually looking at is a fascinating story of massive corporate evolution. We're going to see exactly how a global giant navigates some really intense structural changes.
So let's hit the bottom line right up front. $18.7 billion. That's the total revenue Accenture brought in over just this single quarter. It's a massive number, right? It immediately establishes the sheer incredible scale of their operation. To put that into perspective, you're looking at a sprawling global network of services, consulting, and tech, all converging into this one massive quarterly figure.
Okay, let's dive into this. Here's our roadmap so you know exactly how we're going to unpack this today. First up, we've got the Q3 report card. Then, we'll look at where the money flows. Third, we're digging into their strategy around AI and cybersecurity. Fourth, how they're rewarding shareholders. And finally, we'll wrap up with the future outlook. All right, kicking things off with Section 1, the Q3 report card. We're talking solid growth and earnings here. This really illustrates the core health of the company. That $18.7 billion, that actually translates to a super solid 6% increase in US dollars compared to the same time last year. But honestly, look at the new bookings, $19.3 billion. That tells us their future pipeline is incredibly strong. Plus, their diluted earnings per share is sitting at $3.80, which is a really healthy 9% bump. Bottom line, they aren't just making revenue, they are efficiently turning it into actual profit.
So what's actually driving all this? Let's anchor that financial data to this quote from Julie Sweet, Accenture's chair and CEO. She says, "Demand for large-scale reinvention remains strong, and we are seeing more large-scale AI transformation programs." And you know what really backs that up? The fact that they saw 104 quarterly client bookings of $100 million or more, that is huge. It proves this whole reinvention thing isn't just some corporate buzzword. It's a massive, tangible driver of their business right now.
Moving right along to Section 2, where all this money is actually flowing from, breaking down that $18.7 billion. If we break it down geographically, the Americas are bringing in the most raw revenue by far, a giant $9.14 billion slice. But the really crucial takeaway here is actually the EMEA region, Europe, the Middle East, and Africa. They brought in $6.87 billion, which is a massive 10% jump in US dollars this quarter. And then Asia-Pacific rounded things out with a really solid $2.71 billion.
Now let's slice that revenue a completely different way, by the type of work they're actually doing. Consulting grew by a respectable 4%, hitting $9.33 billion. But look at managed services. It grew at 8%, reaching $9.39 billion. So what's the so what factor here? Well, it clearly illustrates that managed services is growing at literally twice the rate of consulting. Clients are increasingly relying on Accenture to continuously run their tech operations rather than just calling them up for a one-off advisory project. Let's pivot to Section 3, strategy. Specifically, how they're treating AI and cybersecurity as the absolute next frontier.
Look, to grow, you've got to invest. And Accenture has been making some highly specific, deeply strategic acquisitions lately. They grabbed a majority stake in Dragos and outright acquired all of RunZero and NetRise. What do these three have in common? They are absolute leaders in operational technology security, or OT security. This isn't just about protecting corporate emails, right? It's about protecting physical industrial systems and critical infrastructure. These acquisitions drop Accenture directly into the center of the most complex cybersecurity challenges their clients are facing today. And these moves represent a much broader strategic vision. They definitely aren't just random purchases to grab a few headlines. As their leadership noted in the earnings release, these acquisitions are perfectly calculated to expand their addressable market. It's a platform-led growth opportunity. They're basically buying the right tools and the best talent to offer entirely new tiers of security services to the world's biggest enterprises.
All right, Section 4. What does this all mean for the investors? Let's talk about rewarding the shareholders with dividends and buybacks.
Now, what's really interesting here is this single number, 10%. That is the bump in their quarterly cash dividend, which is now sitting at $1.63 per share. For investors who are heavily focused on income, seeing a double-digit percentage increase in the dividend payout in just one quarter, that is a very strong, very clear signal of the company's ultimate confidence in its ongoing free cash flow. Looking at the full picture of shareholder returns, Accenture delivered a total of $2.2 billion during the quarter, and it's split into two main buckets. $1.2 billion went toward share repurchases, which of course reduces the overall number of shares on the market, and then $1.0 billion was paid out as direct cash dividends. It just shows a really strong, balanced commitment to generating shareholder value, both from capital appreciation and direct income.
Finally, Section 5, the future outlook. We're looking ahead to full year 2026.
Let's compare their full-year fiscal 2026 outlook as of June 18th against their older projections from March 19th. First, check out the revenue. They made a slight adjustment there, tightening expected growth to 3 to 4% in local currency compared to that previous 3 to 5% range. But look closely at the expected adjusted earnings per share. It actually increased at the lower end. It moved from a previous range of $13.65 to $13.90 up to a revised $13.78 to $13.90. So top-line revenue growth expectations narrowed just a bit, but profit expectations per share tightened upward.
But hold on, there is a super important piece of context behind that revenue growth adjustment. When we look at that 3 to 4% projection, the company explicitly notes that it includes an estimated 1% drag specifically from their U.S. federal business. If you just exclude that localized federal sector impact from the equation, the core local currency growth expectation actually bounces back up to 4 to 5%. It's honestly a great example of why you've always got to dig into the underlying data to understand the real story.
So here's the crucial point we are left with. With these massive bets on AI transformation and some huge strategic acquisitions in OT security, how will Accenture's reinvention shape the tech landscape of 2026 and beyond? They've already shown us the $19 billion in bookings, which proves the demand is very, very real. Now it's all about execution. Thank you so much for joining me on this explainer. Keep your eyes on these structural shifts, guys, because the numbers we unpacked today are literally drawing the map for tomorrow's digital economy.